Hi, Prabhu. Thank you for watching my last video. If you still haven't watched it, please click on the link mentioned in the description box. In the last video, I told you about my journey in the stock market from being a loser to a winner. On my this journey of learning to trade, I met few amazing people who taught me how to understand the stock market business and how even I can make this as a secondary source of income without compromising on my primary job. And being inspired from the selfless nature of my trainers, I want to express my gratitude to them by sharing this knowledge with others and help them out as well. I am on a mission to help at least 10,000 people so that they can also create a secondary source of income from stock market, just like me. No. I'm not going to tell you how to get rich quick in this market. People who approach trading to make crores of rupees in a day sooner or later will lose money and ultimately the motivation to continue with the market. I'll be teaching you how to get better returns on your investment without much risk consistently. For all my friends who are very new to stock market, don't worry. I'll start with the very basic concepts and progress gradually. All your doubts will be cleared in due course of time. So let's start with this first question. What is this stock market? Let me tell you a story. He is my friend Sid. Sid is a business owner and he wants to expand his business, and for that he needs funds. Primarily, there are three ways to generate funds. First, ask from friends or relatives. Second, get loans from banks. Or third, list your company in the stock market. So Sid calls his friends and asks for money. His requirement is 1 crore rupees. None of them agrees to fund his business. Then he approaches banks for getting business loans, but he doesn't get a good deal and bank charges a very high rate of interest which doesn't suit his needs. Then he approached his mentor for his guidance and got advice to list his company in the stock market. So Sid approaches SEBI, a regulatory body, to know the procedure, and SEBI told him to launch an IPO. What is an IPO? IPO, or an initial public offering, is a process by which a private company offers its stock on a public stock exchange for the first time, becoming a public owned company. One of the benefits of an IPO is that it allows a company to raise additional capital. As soon as the IPO is launched, many investors came to invest their money into Sid's business. Sid is happy now. He got the required funds and his business is flourishing like never before. But what about the investor who invested money in Sid's business? Let's hear another story. He is Hari, working with an IT firm. He reads about Sid's IPO in the newspaper and being impressed by the business, he decides to invest in his company. Sid wanted to raise 1 crore rupees for his business, so he issued 1 lakh shares for 100 rupees each. He advertised this in the newspaper. Hari, after reading this news, decides to buy 2000 shares of Sid's company by investing 2 lakh rupees. By doing this investment, Hari now became a co-owner of the company. But his stake is only 2%. Hari can increase his stake by investing more money in the future. As Sid's business grew, his profits were distributed among his investors as per the percentage of amount invested by each of them. So our investor Hari gets 2% of the profits generated by Sid's business without actually doing any work, just by investing his money. Now this is win-win situation for both of them. Sid is happy because now he can expand his business, and the investors are happy because now they're getting better returns out of the investment. Thank you for watching till now. The story has just begun. In the next video, I'll tell you how the price of a share fluctuates in the stock market and how can we get benefit from it. Thank you. Please subscribe to get more awesome videos like this.